Just few days ago, Nike released their quarterly financial results and their price dropped from $95 to $83 per share. And even before the drop, it was at the 52-week low. So let's look at the results and analyze the company. But before we do that, I just wanted to say a big thank you to everybody that watches these videos, likes them, comments on them and subscribes to the channel, because the channel just hit 500 subscribers, which is absolutely mind-blowing for me. And I just wanted to say thank you and that I really appreciate your feedback and your support. Okay, so let's look at the results of Nike. So as we can see, the revenue went up 4%, but at the same time, gross margins decreased from 46.5% to 44.3%. So the net income is down 22%. But if we look at the earnings per share, it is down 20%. And the difference is because Nike bought back some of their shares. We can see that a year ago it was 1.6 billion shares, and right now it's 1.5. Okay, so what else can we find in the results? Well, the important thing here is cash and equivalents, and it is down 33%. So we can see that the short-term investors really don't like these results. But if we consider ourselves long-term investors, then this price drop can be viewed as an opportunity. But to decide if this is a good long-term investment, we have to analyze the company. So let's see who is investing in this company right now. Insider ownership, that's a check. Individual insiders own almost 20% of Nike, which is absolutely incredible, because even a number over 2% would be a check. But in this case, we see that the board and the directors have skin in the game. They put their own money into this company. So not only they believe in this company, but also they will do well for the shareholders, because they are the shareholders. Okay, and are they buying right now? That's an X. No insiders are buying the shares in the recent quarter. Okay, what about super investors? That's a check. There are 9 super investors that own Nike stock. But are they buying right now? That's an X. In the recent quarter, super investors bought around 150,000 shares of Nike, but at the same time they sold 1,150,000 shares. So they are selling in a big way. Okay, so right now let's look at the financial health of Nike. First of all, return on invested capital. That's a check. It is around 24% per year for the last 10 years. And what about free cash flow growth? That is also a check. It's 13.4%. And in both cases, the return on invested capital and free cash flow growth, we are looking for numbers over 10%. So this is really nice. What about profit margin? That's a check. Their net profit margin is almost 13%. And that's not exceptional, but it's really decent, especially in the market they are in. And what about shares buyback? That's also a check. In the last 10 years, they bought back 13.5% of their shares. And they are going through with their 4-year plan to spend $18 billion on repurchasing. So we know that in a long term, they are going to continue buying back shares. Okay, and what about years to pay debt? That is also a check. It would take them around 2 years to pay their long-term debt with their current free cash flow. So as we can see, they have a very healthy financial situation. Okay, so let's look at the dividends. The current dividend yield is around 1.5%. And what about the payout ratio? That is also a check. It is 31% of their earnings. And that's really, really healthy, because what we are looking for is a payout ratio between 30% and 50%. Anything lower, then we may say, well, the dividend is not high enough. But then again, the money that they're not paying in dividends can be invested into the company. So actually being lower than that is not a problem. But being over 50% can be a problem, because at a certain point we get to a situation in which it is just not sustainable, and the company has to actually borrow money to pay the dividends because they're not earning enough. But in this case, it's really healthy, really stable, and actually their dividend is growing at a rate of around 11.1% for the last few years, and they are growing the dividend every year for over 20 years. So this is really, really nice. Okay, so now we should value this company, because we can see that it is in a very good shape financially and that they have a nice dividend on top of that. But what should we pay for this company? And for that, we will use a discounted cash flow formula. And we will have to estimate the growth of the company, and we will make 3 scenarios: low, medium, and a high one. So in a low scenario, for the first 5 years, we can estimate 7% and then 6% growth for the next 5 years. In the medium scenario, 9% for the first 5 years and then 8%. And for the high scenario, 12% growth and then 10% growth. Okay, so we have those estimates, and they are basically in line with the current growth, or the growth that we could have noticed in the past years. Okay, so what is the intrinsic value? In the low scenario, it is around $48. In the medium, around $56, and in the high scenario, around $67. But of course, these are not the prices we should be looking for, because we always have to add a margin of safety. I use a 30% one. And if we add a margin of safety, then the price that we should consider buying this company for, in the low scenario, $33 or $34, in the medium scenario, around $39, and in the high scenario, $47. And the current share price is $83. So as we can see, it is all red. So it seems that Nike is still overvalued, even after the drop in its price in recent days. And if we look at the PE, which is around 23.6 right now, I just don't believe that Nike can grow that fast that it justifies such a valuation. But if you think I'm wrong, if you know that I missed something in my valuation, that I should look at Nike in a different way, then please let me know in the comments. I'm really curious about your view on Nike. Okay, so that's it for today. Thank you very much. Please like the video if you found it interesting, and subscribe to the channel if you want to see more videos like this. Thanks again, and bye-bye.